Now let's have a look at technical. So that's long term from 1984. You can see that's what I like free stock charts because in majority of brokerage software, for example, Interactive Broker, I can go as far as 2 years only. Whereas here, I love it. You can go as far as you want, like 1984, and you can see the growth. And I calculated if you put, I think, $2,000 in Disneyland when it went public in something like 1984, I think, uh, you will be owing now about half a million or 400,000 to 50, uh, $450,000. So imagine the growth, right? So if you just, and also you got quite a lot of money in dividends, huge amount of money. Okay, that's so you see that the company went here to $120, quite good growth from 2010, and now we see a downtrend. Okay, and if we look at closer, that's what we can see. Uh, from 2015, actually, when the whole market was going down in January, Disney practically didn't go down, quite low, so it wasn't affected. And remember, this time was um, if you look at the Dow Jones and S&P 500, you will see this drop nearly 15%. Here, nothing happened, like normal rolls, and then it started growing pretty fast. And then it already did several moves. Oh, actually, sorry, mistake. That was 2016. Sorry, guys, looking at wrong year. So yeah, it was a drop here in January in any way. So and that's the rolls. And at the moment we can see that at support. So it's already one, two, three. Here it's kind of broke through, and now it's fourth time. So it's quite a strong support level. Also, if we look at technicals, we can see all indicators are in the right place. So we can see MACD below zero, like in start turning up. If you increase this, you will see it. If you look at your chart, we can see the stochastic already crossed 20% line. We can see that RSI also already crossed 30% line at 30.43. So it's kind of telling us that it's good entry point. But what I want to pay attention that the highest points they're always getting lower and lower and lower. So it's like it's holding the bottom line, but the top line is kind of reducing and reducing. And at this moment, it's like a pipe triangle. Usually, when it breaks here, it moves on the same level as its base. So if we see that base here, nearly 30 bucks, okay, so when it breaks through this end of the triangle, we can expect a similar move. And it could be up or it could be down. So if it goes up, so it goes to $30, so back to 120. If it goes down, so it goes to around 60s. Okay, that's based on pure technical analysis. So how company can move. Now, when you know that fundamentally we look at this company that it can go to $70, right? So we identify that historically, if they keep the same type of earnings as last year, and the multiples would be similar to the lowest point, it might go to around $70. So it might lose about $20 in price. So it wouldn't be surprised. It still would be great company with good income and etc. etc. But it can swing to that direction. But at the same time, we easily can understand that it's already undervalued and we already have an opportunity to move and we have more kind of higher chance to move it up rather than to move down. Okay, and that's why every time when you make this decision you have to understand what how you make it. Okay, so are you happy to buy at this level? And if not, just go for another company. If you're happy to buy on at this level, yeah, so you can enter, but you can expect that it's going to go down, and you need to know plan B. B. Okay, so what are you going to do? Just sitting and waiting, buying more companies at those level and averaging them down, selling calls, or maybe buying put when you see that moves happened. Okay, so you need to know what your actions are going to be during this time. Okay, so guys, is everything clear on the technical analysis? And I also want to ask you, uh, based on this type of chart, where do you think the price might move in the next week? what trading range it can go. Okay, Fraser put 92.95. Dean 85.95. Okay. Sergey below 92. Yeah. Now, yes, you're right. If it continues this trend, and I can put another line here, like I mean in the middle, right? So, and if it continues this trend, if it breaks this part, so the next probably level would be where the Brexit was here, okay? And no, January was here, and you can see it's about $87, 88. If it continue this, somewhere $88 on that level. So it's going to happen tonight, tomorrow, and any of these days. Okay, so very close. Maybe after Fed's coming up with their announcement, it might affect the price. So it's easily can go. If it bounces through here, so the resistance line will be here around $96. So it's quite tight area to maneuver. So from $88 to $96, right? And only if it holds this level, then we can expect that most likely if it breaks through, it goes to 99, then it goes to 105, and then it can move back to $120, similar to what happened in August. So it's dropped from 120 to same level 92, and then look at this how quickly it moved up. So it takes only what, 1, 2, 3, 4 until November, from August to November, 4 months, and you can make from $90 to $30. So it's what, 30% growth. So pretty good one, right? So that's why try to pay attention on this particular, and let's have a look what kind of strategy you can use.